Um, so today I want to show you some market breakdown on how I managed to grab this movement from this point and how it's currently learning. Also, sorry for my English. Yeah, sorry for my English as well. So I'll be looking forward to show you how I managed to grab this for the entry from this bottom up to the top here and currently landing like 200 pips easily. Thank you. So without wasting time, and let me show you the exam. I mean the let me show you what I'm talking about. So these are the trades that I managed to take. So the first trade was at this point, and the other trades were at this point. Yeah. So this is how I managed to grab these trades from this point and this point, and currently learning like 200 pips. I'll be posting the video as well. And I managed to flip around $800 to $6,000 GBP, because I used the currency of GBP. So without wasting our time, let me show you quickly how I managed to grab these entries and very simple steps, and they might help you as well in the future. So first thing first, what we look upon, we need to look for the market structure. So the market structure is the king. That's what you need to look upon. Unless otherwise in the forex market, you'll have some difficulties. You'll find sometimes you collect, then the market goes on your side some few pips, eventually stops you out at the break even or at the stop loss. So what you need is at least you need to have the market structure well aligned on your chart. So for instance, for GBP card, no, GBPJPY, I was looking at GBPJPY. I went on because I want to swing, then I normally use the weekly time frame. Weekly time frame is the best time frame for me to have access on swinging. So as I came on weekly time frame, I didn't confuse myself to go and look for a lot of data in the market, because most of us would go even 3 years back to watch what happened 3 years ago. But I decided to look just at the present or the current market price and what the price is offering me. So for the first time, I came and I see that the market has been breaking or has been validating these highs and lows. Eventually, I came across and see this structure that is displayed at my eyes. So what I decided to see, I mean, what I decided to do first, I saw that the market was trending higher. This was a bullish structure that I was seeing on my sorry, that I was seeing. So this was the bullish structure, because the price has been validated in structures. We had this point that has been broken by the price. We didn't have this point that has been broken by the price. So eventually, whenever the market breaks the structure, it needs to come and grab the liquidities or before proceeding to the direction that it's supposed to proceed. For this case here, the price managed to break this structure. You can put on a line chart like this and see where your candles are aligned. So the last candle to be made with this one So simply we had a sample of breakout. We can call it a support and resistance breakout structure. So this is a break of market structure that comprises of support and resistance. Now, why is this support and resistance? And can you call a level a support and resistance? What's its nature? The nature of support and resistance, price needs to bounce either from top or bottom. So from bottom 2 times, from top 2 times, at least 2 times. You can call it a support and resistance. You can't call this a resistance level, sorry. You can't call this a resistance level because price hasn't supported, hasn't resisted anything. So you need at least to have 2 levels like this, first time, second time, for the price to be called support and resistance. So this is the resistance because price resisted for the first time, second time, then managed to break the structure. So if the price managed now to break the structure, it will eventually go back to the level to test before proceed. That's the thing that you need to consider or to look upon after price breaking the support and resistance level, because this was the toughest level for the price. Remember, this is a weekly time frame. So the price here was rejected. For the second time, the price was rejected. We had the candle closure below. I don't know what happened here because we needed to have a candle opening above this one, but eventually the market didn't. It created here. We also had another rejection. We had the fourth rejection. We had the fifth rejection. The sixth candle that came upon, it managed to break the structure. So this was the toughest level of the market. I can say like this one, this is the toughest level of the market because the market has been rejected multiple times, then price continued to the upside. This is what you can see here. So if that's the case, what should we do? I mean, what must be done is to look what's happening, because the market now was approaching the level or was at the level. We need to look what's happening at this level. So you can use the same structures to enter the trades from this support. Some people would have entered here, but where would your stop loss be? So in order for you to minimize the losses, you should go and look what's happening in the structure here. We'll use what we call timeframe parallelism. Most of you don't know about timeframe parallelism. Because I found price at this point somewhere. Let me see. Somewhere here. It was lagging somewhere here. So when I go and look for the structure break, the market didn't have the structure break. We call it a shift here on our strategy or methodology. So the 1 hour would have given me the clear structure, because the structures tend to more happen in smaller time frames rather than bigger time frames. So the structures are created earlier in smaller time frames, then we found them in bigger time frames. So for a small time frame, we had this break of structure, simple break of structure, very simple break of structure, because I found the market at this point. This point is where I found the market. So for the decision that I made, I came here. So most of my students, I taught them about what we call the areas of liquidity and the engineer liquidity. Also, I taught them a failed engineer liquidity. We can mark this level. This also level was the toughest level of the market. This one, because the market has been testing multiple times. First time, second time, third time, fourth time. Then it came to break for the bottom. Also, it came tested for the other time, dropped, failed to create the low. The purpose of it failing to create another low here, it has failed to create the structure and hence breaking the structure, shifting the market structure. Some people can use trend line alignment. Yeah, maybe they say, okay, the market will come and test at this point. It's okay for you. Everyone has his own or her methodology on how he approaches the market or she approaches the market. So for this case, we also had the area of liquidity. This is our area of liquidity. The level is aligned to the area of liquidity. What should be done? We enter at the level. There is where you put your entry. You can put to the last level to be reject the market after breaking the structure or before breaking the structure. I mean, after breaking the structure, or you can put just to the level, because the market won't come and test the engineer liquidity that is be considered the engineer liquidity inside this area. And you'd have asked, where should you put your stop loss? As well, you put your stop loss at the furthermost deviation. So this becomes your stop loss. And this becomes your entry. Eventually, after market, because in market, we know we validate the market based on the structures that are made. So if the market created the inside formation and the outside formation, this will be our validation now, or our confirmation that now the market has changed the direction and it has started going to the upper direction. So the market gave us the inside formation was our first entry. There are some re-entries that people might use from this point. Where is our second entry now? Where is our second entry? But if you have put your first entry, where should your take profit be? It's eventually this point, the first trouble area. So most of our students know about it. So this was our first entry. I want to show you how I got also my second entry. This was my first entry. So my second entry was after price validating another structure here. So after price validating another structure, we had our clean area of liquidity. And you'd have said, why did the market tap multiple times? Was it not consumed? Yeah, not consumed because the price didn't validate the structure again from this point. So that's why this wasn't consumed. So if the price validated the structure from this point and it came inside, we won't be considering this area again because it has already been consumed by these candles. So even if the market could have tested it 1,000 times, this would still be valid. So it tapped for the first time around this area of liquidity. And once you go to small time frames here, you can find now your engineer liquidities on this angle. Tapped for the first time, second time, and this is our entry because I didn't want to put here as my first trouble. I mean, my furthermost deviation. I used this point down as my furthermost deviation. And this is how you trade. You take the trades, you add position. What if now I would love to add some position as the market goes up? We have what we call now the support and resistance, a lot of support and resistance. So this was my first entry. As you can see, the market went up to its upside target, as you can see. And this one, most of the time, TradingView doesn't show you the deal points that are needed to be shown. It shows 297 bits. No, it's not 297 bits because my first trade is only learning 200 pips. So this was my first entry, though I'm still holding because I saw the price that will still push to the upside. And this one was my second entry. At this point in, this was my stop loss, still learning. Also like 150 pips, I guess. So what if I decide to add some trade or position? This would be my, so we had our support and resistance. This was easy one. First touch, second touch. For this case, for this break of market structure, the last level to be created would be our entry point. Very easy. You put your line there, then the candle that broke the structure is where you put your stop loss. And this now is what we call the support and resistance flip. Now, what if you missed the structure? What if you missed now you wanted to enter the market? There are a lot of opportunities. You would have still enter here. So for the one that came to test the structure, so once we go to small time frames, at this point we'll find what we call an engineer liquidity. Let me show you. We'll find what is called an engineer liquidity. A very small time frame of refining. So this one is our engineer liquidity at this point. That wasn't consumed at all. And as you can see, the market came and tapped, proceeded to the upside, and never came back. Also, if you wanted to add another entry, we still had another engineer liquidity, but this wasn't tapped by the market. I don't know. I was watching live what happened at this point. Looks like we had news here. I don't know. Or the opening session. So the market came to the bottom, then bought high. And as you can see, after this moment, the price is running higher. So this is the very best trade of the last week. Yeah, that's it. So there are a lot of conference that you need to add, because I also add another conference. I also had another conference. This is area of liquidity as well that you should consider if you didn't want to enter at this point, because this area, this point, price came to grab liquidity from this flip. Also, from this case, the market came to grab the liquidity as well and still going. So that's why you can see me holding these trades up to now. It's because I did a breakdown, and sometimes just don't need a lot of trades to take in the market. You just need one trade that can give you some dollars. Thank you very much, and I'll be sharing you some videos. Thank you. For those who are subscribing on my YouTube channel, please don't forget to share, like, and comment as well. Thank you.